This week looks quiet on the surface, but under the hood, a few important things are shifting. Hey YouTube, Julian here, and in this update, I will be walking you through what the latest job data means for rate cuts. Then we will look at the charts to see what the markets are showing in the coming week. So you guys are ready? Let's jump right in.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
The non-farm employment change got released this week on Friday, and the US job reports were pretty mixed. Only about 50,000 jobs were added, which is slower than forecasted, which was 66,000, which tells us one thing: hiring is cooling down. At the same time, the unemployment rate actually fell to 4.4%, which means most people who want to have a job still have one. So the takeaway is this: the job market is slowing, but it is not weak. Now, this data is subtle, but it gives us some insight as to what the US government is going to do with regards to interest rates. Because the Fed watches the job reports very closely when deciding what to do with interest rates. The hiring is slowing down, but employment is still low, and this doesn't give the Federal Reserve the pressure to rush into cutting rates right now. The economy isn't overheating, but it is also not breaking. That's the narrative they are trying to portray. So, looking at the FedWatch report, this tells us that there is actually a 95.6% chance that there will not be any rate cut happening in the upcoming FOMC meeting on 28th of January. This report also tells us that the Federal Reserve is likely to stay patient, wait for more data rather than cutting aggressively right away. And this is evident in the following FedWatch results. Looking at 18 March, there's a 71% chance that the interest rates would remain the same. As with 29 April, where there's a 58% chance that it will still not get cut. So, the next expected rate cut would only likely be on 17th of June, with a 47.3% chance that a 25 basis point cut will happen. The Fear and Greed Index also looks neutral right now at 51. Having said that, let's look at the charts. Looking at the SPY, it looks to be in a pretty good shape right now. You can see that the SPY has bounced very nicely on these trend lines, respecting it and creating higher highs and higher lows. This was a new high that was created just last Friday, which again was a very, very good sign for the S&P 500, and it just tells me that the market still intends to go up. Now, I do expect that possibly there may be a slight retracement before pushing up higher, or the market can just straight away push up. And these are some of the areas that I'm looking at that the SPY would likely reach first: 697 and 704. But now, if we know that the interest rates are likely going to be delayed a little bit, well, this may possibly move a little bit slower before reaching higher. Let's see what will happen as things progress. Next, let's look at Apple. Apple seems to have broken through this support right here, and it is now at the next level of support. So this tells me that Apple does have a quick retracement, and in order for Apple to want to continue its way up, it has to respect this support, push up higher back to this level of resistance, right, to see what's happening next. And if Apple continues to decide to go down lower, it will break through this support and head to the next support. So let's see what will happen to Apple. Next, this is Google, and you can see that Google is currently right back at the resistance at this all-time high. It hasn't been able to break past this resistance yet, and I would like to see a breakout of this resistance, solid body candle close, so that this gives me further confidence that Google wants to go up. If this resistance gets respected, it can very well come back down to this level of support right here. Microsoft has also still continued its sideways movement as it has for a very, very long while right now. Is trying to push up again. It will be playing within this level of support resistance until either the support or the resistance breaks. If it breaks above the resistance, it will go up higher, but if it doesn't, it will go down lower. After a breakout to the upside, Tesla actually broke through this support right here, went down to the next support. Right now, Tesla is actually playing sideways, heading back to this level of resistance and possibly going to be bouncing back and forth until another breakout happens. Things are finally looking good for Amazon. Amazon managed to close above this resistance, and I do foresee that Amazon is actually heading to this next level of resistance right here. If it is able to break this level of resistance, it will break and go higher and create all-time highs. If it doesn't, and if it respects this level of resistance, it's going to come back down to this level of support. So let's see what happens to Amazon. Nvidia also playing sideways between this level of support and resistance since December. Right now, I'm looking for Nvidia to respect this level of support to continue its way up. And if it wants to go higher, it has to break above this. Failure to do so, it will actually come back down. And if it breaks below this support, it will go down even more. Meta has also been playing sideways. As you can see right here, it actually followed the plan nicely according to the analysis that I gave in the previous video. It actually broke below, price came back up into this resistance, continue its way down lower, back into this support. Right now, it is bouncing off this support, heading back to this level of resistance. So let's see what's going to happen to Meta. If it wants to break out, it has to break above this. Failure to do so, it will actually just come back down to this level of support. Next, let's look at Adobe, which is a request by one of our subscribers, Clarence Chan 835. Let's head over to the charts. As you can see, this is Adobe. Right now, it is playing between this level of support and resistance, and it has been bouncing back and forth for a very, very long time, since July, in fact. Right, and in order for it to want to go up, it has to break above this level of resistance in order to climb up higher. If it doesn't do so, and if it breaks below, it will actually go down to the next level of support, which would be somewhere around here. From the looks of it, from the daily perspective, it has still been showing a signs of downtrend since it is still creating lower highs and lower lows. But right now, it has kind of slowed down a little bit. But still, in order for you to want to go up, this is one important level that it has to break above. Failure to do so, it will still remain sideways, or it might even come downwards. Now, if you want me to do an analysis on any company of your choice, just comment down below in the comment section, and I will be more than happy to do that in the upcoming video. Next, let's look at gold. So as you can see right here, gold has shot up in the last week after a bearish week in the week prior to that. And one of the reasons is purely because of the geopolitical issues that the world has been facing right now. We have the US-Venezuela conflict.
Handcuffed, blindfolded, captured from his country. This is Venezuela's president, Nicolas Maduro, being sent to the US after being seized by US forces.
We have the Iran massacre that's been happening. And with all this uncertainty, gold will become the safe haven for a lot of investors. And that's the reason why anytime you see news like this, you will see gold start to spike up. So right now, gold is at a very crucial area. As you can see, this is the resistance that gold is heading towards. And if gold wants to go up, it has to break above this resistance in order to continue higher. But if it doesn't, there is also a possibility that it might respect this area and continue its way downwards. So if you ask me what's going to happen with the increasing intensity, I say that very strongly there is a chance of it breaking above to go up higher. And where is gold likely going to go to if it continues its movement higher? I would say that it's likely going to go to 4684. That is my prediction for gold. And yeah, I'm very happy and excited for gold to continue going up. Next, let's look at Bitcoin. As you can see, Bitcoin has still been playing sideways with no end in sight. It is still trying to break above 95,000, as I mentioned in the last video. Unfortunately, it's still unable to do that. The week still closes below. Actually, the week's not closed yet. It's still one day more, but I would still say that it is still looking like it is likely going to be moving sideways until a clearer direction is shown for Bitcoin. So with that said, guys, I hope that this market outlook has been helpful for you. It takes a lot of time for me to do this. So help me out by subscribing and smashing the like button so that this goes out to more people. And again, as I mentioned, if you guys want me to go through any of the companies for analysis, then help me out by commenting down below so that I can do the analysis in the next video. Now, if you want to see how I actually make $1,000 days using a very simple strategy, all you need to do, just click the video somewhere around here, and I look forward to seeing you in the next video. Bye bye.